Alright, ladies and gents, it's been a year of no uploads on this channel. I've neglected this channel completely and utterly, but today I decided, you know what, let's pick up a camera and let's give out some value. We're going to be talking about the entry model that I use. You know, there's a lot of jargon, there's a lot of confusion, there's a new concept every other day, there's a new name for the same concept every other day. For example, imbalance, that we all know and love. Imbalance has got like 5 names: imbalance, inefficiency, fair value gap. There's a few other names. That to me is confusion, and sometimes it's good to just simplify everything, return to the basics. And to me, the entry model is one of those things where it can make or break your strategy. It's similar to psychology and risk management in that sense. If you've got bad risk management, you're a bad trader. If you've got bad psychology, you're a bad trader. If you've got a bad entry model, which is essentially your strategy, you're gonna be a bad trader. A lot of people will say, you know, every strategy works if you've got good risk management, and I do agree with that to an extent. But if you've got a better strategy, and there are strategies that are better than others, then of course it's gonna be easier for you to be profitable and for you to make money. So we are going to be going through my entry model that I've been using, that I still use to this day, but also then going to be breaking down a trade where I entered according to this entry model, a beautiful trade, a 1-minute entry that I actually sent to the team. By the way, is still open, so I sent this out to the team, sent it as a signal, sent a video breakdown literally, and then sent through my actual entry, of course updated the team, etc, etc. We're going to be breaking this down because this is the perfect entry in practice for the theory entry model that I'm going to be breaking down for you all now. Before we do that though, what have I been doing for a year? It's been a very, very, very crazy year. It's been a roller coaster of a year. Lots happened this year for me personally. I've invested in and built up a completely different business outside of trading, in property. I moved country, I got married, a lot has happened. So I'm gonna start to let you guys all into my personal life a little bit, not too personal, but I feel like you guys deserve that. So I am gonna be doing that. Let me know in the comments for any video ideas that you'd like to see, Q&As, etc, etc. A lot of you guys don't know anything about me. For a lot of you, this is gonna be the first time you even seeing my face, so hello to all of you that are just seeing me for the first time today. But yeah, that being said, we're gonna get straight into the entry model. We're gonna give away some value. My entry model, as I said, has not changed. If you go back 2 years of uploads, you'll see the same sort of drawings, the same sort of chart. You know, there might be slight differences, different types of liquidity, you know, different chart annotations. I might, instead of saying CHOCH, I might just put a C. Instead of saying you know, double bottom, I might just put an X. But generally my strategy is the same. Everything on my chart is the same. But yeah, so first things first, for me, when I'm buying a market, I always want to be getting confirmation on the lower time frames. You'll hear a lot of people say you can enter aggressively on the higher time frames and you can have a good win rate and you can get a good risk to reward. But for me, I can get a better risk to reward, sometimes even get a similar win rate to you when you're entering on the higher time frames. So for me, it's from my data that I've got for the back testing that I've done, M1 entries, and actually my entry on GBP CAD was actually sent out on the 32nd. So forget an M1 entry, this is a 30-second entry. Again, you can do your own back testing, but for me, I like to get lower time frame confirmation. But that does not mean we do not have higher time frame zones. We will always have a higher time frame zone. If it's we're buying a market, it's going to be a demand zone. If we're selling, it's going to be supply, of course. There are certain things that can make a demand zone a higher probability demand zone. We're going to be talking about if everything is perfect. If in an ideal world, so here for example, we've got a low. This can be equal lows, it can be an Asia low, it can be a pivot point, so just a low in the market. This is going to have liquidity resting below it. The market takes out that liquidity and then forms our demand zone and then gives us the change of character, the break of structure, depending on if the market reversed just before this point or is continuing in a bullish trend. So we've got a break of structure that solidifies order block, in this case demand zone, and in this case we've got and ideally we would like to have seen a liquidity grab form happen just before the demand zone form. I would like to see the market form or give me a reason for the market to push up. So in this case, what the market's done is it's formed equal highs, right? We've got an area of liquidity resting above it, and therefore we know liquidity acts as a magnet to the market. The market will look to pull and push towards that area of liquidity. So here we've got a demand zone, and then what we've got is equal highs. So we've got a reason for the market to come down in the form of this demand zone, and then once it comes down, we've got a reason for the market to go up. Then what we've got is on the way back down to the demand zone, we've got the market form liquidity, right? So now what we're thinking is, if smart money wants to buy at this area, they're gonna have to push it down into the demand zone and then buy up. We want to be looking at demand zones that hold. Of course there are things that make the demand zone more likely to hold, and for example, liquidity being taken just before the demand zone forms. Equal highs to target after the market comes into the demand zone. These are all things that add confluence to our demand zone. So here we've got a very demand zone that's very likely to hold. Also, if we look at our range, and there's another thing that I didn't actually plot on, but if I plot on the range, if I plot on my fib, you can see that we are just below the 0.79 of the fib. This is the 0.79 of the fib. We are just below it. Therefore, we are in a discounted area within our range. These are all, we're just adding confluence, stacking confluence on top of confluence. We started off with liquidity grab. Then we had equal highs to push the market towards. We've got then liquidity forming on the way to the demand zone. Also, now we can see that the demand zone is in a cheap area to buy from. After that being said, I always wait for confirmation, and that might be actually a thing that has changed since the start of this channel. In this, maybe at the start I was entering aggressively off higher time frame zones, but for now I always go onto the lower time frames, and that might be because of the popularity of smart money, smart money traps now being more of a thing. So once we've got the market tap into our demand zone, we always want to see a change of character. We always want to see an indication that the market from this demand zone won't just disrespect it and continue selling, that we will actually see a move to the upside. So for me, I would like to see a change of character. So here, in theory, we're still going through theory, we're going to go through the live market soon. We've got our change of character. The market's pushed upwards, and what has it done? It's formed liquidity. Just like before where we had trendline liquidity, we've just here got a different type of liquidity. We've got equal lows. The market forms equal lows, taps into our demand zone, and then flies. And this is where I would either set my limit or enter aggressively, and I would be targeting. I can target wherever I like. If I'm happy with the risk to reward here, I can get out at 1 to 5. If I'm happy with a 1 to 2, I can get out at 1 to 2. That just depends on however style of trader that you are, and if you have a certain risk management strategy or a certain profit taking strategy, something that's completely your choice. But we're not going to be going through that today. We're going through entry model. We can do a video on profit taking in the future. So that's the entry model in theory. Now what I'm going to do is I am going to go onto the live chart, GBP CAD. You can see literally me in a video break this trade down, show everyone everything that I'm about to show you guys. Now in hindsight, I showed everyone in my mentorship group when it was live, so there's no faking happening. So what we had was we had a 1 hour area of demand. Let me actually replay it some more just before we actually even had the market tap into our demand. What we had the market do was we had the market form this 1 hour area of demand. Just like when I was going through my entry model in theory, that demand zone grabbed liquidity. So here we had a low, the market took it out and then formed our demand zone. On the live market, we had the exact same thing. So we had a low here, and we actually had an Asia low here. So if I drop to like the 20 minute, you will see that we had this Asia low, which is another form of liquidity. The market takes out that Asia low and this low here, which will always have, when we have pivot points like this, the market always will have liquidity resting below it. Now we've got the Asia low, more liquidity. All of that liquidity is swept with this move to the downside, and that's where the demand zone forms. Same thing that I said in theory happens on the live market. You've got a 0.79 and the market and our demand zone is just below the 0.79. So we are in an area of discount. And if I actually add this area, so we actually start from the top of the selling and we stop our demand zone at the bottom of the selling, it lines up perfectly with the 0.79. So we've got a likely to hold here. Also on top of that, we've got trendline liquidity. So on the way into our demand zone, so just before the market actually taps into the demand zone, it forms what? Trendline liquidity, even more liquidity. Everything that I've said in theory is happening on the live market. So here where we had trendline liquidity, could have been anything else. It could have been equal lows, it could have been any sort of liquidity, it could have been an Asia low, any sort of liquidity form just below the market taps into our demand zone, adds confluence to our demand zone. So here we've got trendline liquidity, the market takes out that trendline liquidity, taps into our demand zone, and now what do? We go on to the lower time frames. Before we do that though, we notice that there is reason for the market to go up. Why? Because we've got equal highs. We've got lots of wicks here. We've got another point here where the market comes back and another point here. So the market might look to go up and stop everyone out because there's going to be a lot of liquidity resting above that area of resistance or equal highs. But because of the fact that we've got equal highs, that's added confluence that once the market comes into our demand zone, it's likely to go up. You see what we're doing here? We're stacking confluence. You want to be stacking confluence. That's very important. So for me, what I did is I dropped to the lower time frames here. I saw my change of character. So for me, the change of character would have been the market breaking above this high. So we can mark that out. We can just put the C. The market pushes up. It gives us a change of character. The market then also reacts from this demand zone. So we can start to see it's reacting, which again is going to be a good sign. So this was my entry, if I remember correctly. Let me play the market a little bit more. So my entry, if we just go back to the Discord, was at this area right here. As you can see, that lines up perfectly with this area here. My stop loss was, I did give my stop loss breathing space. I'm not one of those guys that will enter here, put the stop loss just here, because of course then here I would have been stopped out. I put my stop loss at the low, I gave it some space, and I had a a target of here. So that was my target. I was only looking at 1 to 4, but if I wanted to, I could have targeted up here and it would have actually hit TP and it would have been a 1 to 6. But I'm not gonna lie to you, I did only close it here. So if I go to my Discord, you'll see I closed it at a 1 to 4. So that's the trade, literally A to Z. You'll see the entry model lines up perfectly with what happens on the live markets. If I just let it play, you'll see market ends up pushing all the way to my TP and then pushes all the way again to the final TP, and I could have held it all the way, but I didn't. You don't want to complicate SMC, guys. SMC is very simple. You want to look for your higher time frame zones. You want to make sure your higher time frame zones are zones that are likely to hold by stacking those confluences just before the market actually tapped into your higher time frame zone. Whether or not the market has equal highs to target to go to once the market actually taps into a higher time frame zone. So you want to be looking for zones like that, and once the market comes into those zones on the lower time frames, it's as simple as going onto the lower time frames, waiting for your change of character, waiting for a valid zone, setting a stop loss, giving it some space. We still didn't have a massive stop loss. We had a stop loss of sub 10 pips and giving a good target. And for me, the target was this supply zone because I didn't want, for the market to do something like this where the market comes into the supply zone and sells off. Don't overcomplicate things. Come back to the basics every now and then. Make sure to subscribe if you haven't already. This trade was posted into the mentorship group, so if you haven't joined, make sure to join. It's £80 to join, cheapest that you'll find, one-time payment for lifetime access. Don't miss out. And that's it. I've been your boy. Make sure to subscribe because more content will be coming, and I'll see you all in the next one.